All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. We're about 90 minutes here from the market close, so let's go get to it. We have a new trigger on the board with Bank of America. I mentioned this morning that it could turn into a trigger here by this afternoon, and it has. And so we'll be going out and trading that. We have one trade on the board with Target, and Target here is 236, and so that puts Target slightly in the red. For our time stop here by $50. So talk about a trade that's gone nowhere here since we've gotten in. We entered at 87.71, and the price of the stock right here is 87.96. So the stock price has gone up just a little bit, and it is one that do have the option to hold. Because it's one where we do have the stock gain there, and so I'm going to take a look at it here in just a few moments and make a decision there with Target. But I'm apt to just hold it right here. And again, we went through this with another trade. I forget which trade it was, where the stock price has gone up, but because of the decay, the option was slightly negative. We decided to hold it. Again, it's not going to make or break the challenge either way. It's not a critical, vital decision or anything like that. But I'm a little more apt to hold it just because of the exposure. We have plenty of cash to get into another trade, and so would like to have some exposure there. But let's go out and take a look at Bank of America. And Bank of America here is sitting at 29.56 on the stock. This is one where the option, the 30 to 60 days here on the option, becomes very interesting. If we look at the 29s for August, the 16th of August, they're about $1.06 with about a 63-cent delta, right? So that means that if the stock goes $1 against us, we'll lose 60% of our option. Okay, and if we look at the average true range on Bank of America, it's about 51 cents, right? So, if we get stopped out at the stopping price, we're looking at about a 30% loss on the trade, which is about, where we want to see on any sort of trade there with it. But we do have to get a few contracts here. Starts to get into into that 30 range to get into a position that's about what we're looking for. So I did go look at the weeklies and go, okay, the 29 weeklies, are they going to be a little better giving that extra week? But the spread is slightly higher on them. And if we go out to the 20th of September, it's the pricing that I like the most, a 60-cent delta on a $1.34, but it's a little on the conservative side. So going to get a little more aggressive just in terms of the option choice, but again, it's not it's not overboard here. Going to put $3,000 into it. 30 of the 16th of August calls, and I just did a market order here for 106 as an entry price. So let me make sure the alert goes out there. And option ticker is BAC. We've traded Bank of America already for the challenge, but we got a new signal here today with the crossover. Yeah, it did have earnings this morning. Right? It did have earnings this morning. A lot of times when a company has earnings and they move, on those earnings, it won't give a signal because the stock moves more than two average true ranges to create the signal. But that has not been the case here today at all. So we don't have to worry about that. So August 29 calls, 30 at 106 on Bank of America. 16th of August, 29 calls is the strike. There we go. All right, let's get her filled in. 16th of August, 29 calls, 106 entry price on 30 contracts. Stock entry here is, let's see, 29.57. So 29.57 here. The ATR on Bank of America is 52 cents, so 0.52. The stock level, let's see, stock entry price, stock exit level is going to be 29.05 would be our stop level there. And let's see here. Our profit level 30.61. So time stop comes in 3 days from today, which would be the 22nd. So it gets into next week, 7:22 afternoon session, and then 7:24 afternoon session for a green exit there. Now let's get these all centered. There we go. Let's see. 106 is the entry price, so we have just over 3,000 in the trade here on it, and trade is now open. Oops. Let's get Intel closed here. There we go. All right, we are all filled in there, and if we take a look at at Bank of America, you can see the 3-7 crossover to the upside. This is nice that it's happened. If it had just stayed consolidating and we didn't get yesterday's sell-off, we probably would not have gotten that price action for that crossover. But we are getting that action. You can see the 39.1 is above 50 here. And again, this is something we've already played for the challenge, and we played it on this crossover right back here. And we had that kind of 2-day pop, and then it's just kind of been consolidating ever since. And we had a little bit of a 3-7 crossover right here, but didn't signal. Consolidation risk was too high. But now we are getting a signal associated here with Bank of America. Okay. And again, this has everything to do with the signal being driven, has nothing to do with bond rates, has nothing to do with the Fed, has nothing to do with market conditions, has zero to do with its earnings, right? All of that noise, yep, it's all out there. We can garner different opinions based on that, but when it comes down to the challenge entries, it's about price action and probabilities and playing the odds in our favor, and that's what we are looking for here. Okay. Alrighty, so that is the Bank of America entry, and I think I'm just going to hold target here. Again, it's not going to make or break the challenge. The stock is slightly green on us. The option is marginally red on us. The stock's sitting here at just under 88, but very low volume on it here this morning. We saw an institution come in at the close yesterday and sell it, and we saw that same institution dump early this morning. And outside of that, it's been pretty much buy pressure. So that institution may not be done, and that's definitely a risk. And if Target does open up red tomorrow, it'll be something that I'll have to back out of. But I'm going to hold it here into the close today. All right. So that'll leave us with Target, leave us with Bank of America, and leave us with plenty of cash for another position should we get another signal here. 5,600 cash there. You could argue and say, Jeff, you should put more cash into the trades if you're going to, stick with your allocations up front here, right? And you're right. You're absolutely right. I should have more cash into Bank of America. I should have more cash into Nike. But I'm sticking with the allocations that we kind of started with, and I've been just under this this trade allocation here of late. Not by a lot. We're talking 4, 5, 6% per trade. Less allocation there, and yeah. I'll probably just stick with that for the rest of the challenge, right? And just kind of keep that consistent here overall. All right. So there we are. Bank of America entered, running with Bank of America and Target here into the close. Got a comment yesterday, said, Jeff, the challenge is really bogged down here this month of July. And I agree 100% with the challenge or with the comment. The challenge has bogged down a little bit in terms of the performance, right? If we look at the challenge and time wise, we come here to the trades. The right here is July, right? So this is July. And one of the things that's happened here in July, we've now had 6 trades on the board, right? We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 in May and June. So on a pace of trade, we're actually a little bit higher, just fractionally higher than what we ran in May and June. But in May and June, we put about 10,000 in gains into the challenge, right? We put $10,000 in gains, and that was starting with 3,000. We didn't have as much money. Now on the trades here in July, yeah, we've managed about 1,600 in gains, right? We've slogged down and we've slowed down and we've hit that chop mode, but we're still driving with 1,600 in gains with it. But, considering the amount of money we've had on the board, yes, it definitely has slowed down here in a big way. And, we've talked about, the market conditions or what I expect when we get chop. I do expect that, that the challenge will just kind of grind along when we get chop. And then when we get trend, we see huge upside. And, as it sits right now, Disney and Under Armour, a little bit unfortunate. Had our time stop in one session later, both of those would have worked out really well. But then we could say, look, if our time stop on Chevron were a little bit later, it would have, it would have crushed us. Or if our time stop on Target were a little bit earlier, it would have. Right? We can play the woulda, shoulda, coulda game all we want there, and the reality is we can always play both sides. But yeah, I mean, we're still slogging around with some gains, and yeah, we took a $200 loss on Chevron, and we have a small loss here on Target, but we're still slopping around here with gains and punching them in here this month. But could absolutely use a trend or two to emerge. The way we're positioned with Bank of America and Target, they could put in some decent gains if we start to see those things, really start to roll in our favor. But regardless, right? There's nothing in this gains data here that determines decision making for the next trigger, the next trade, or anything like that. And here in about another 11 trading days, I'll put out the next quick challenge summary, do a 60-day summation with the data. But what we'll see is that so far, the challenge is running very below par in terms of the numbers that I expect to see in terms of number of stocks hitting their average true ranges, number of stocks hitting, 4 average true ranges away. But what's also interesting is the challenge is also below par on the number of stocks going 1 average true range against us, right? And so we have both sides of that equation coming into play right now, and that's something we talked about before the challenge even started as being a possibility because of the time of year. Right? Going into the summertime period, this is something that's just a little bit more common than uncommon, and we're seeing it play out. But we have a consistency of trade. It's been a pretty kind of about the pace overall that I expected to see. We were a little slower in June in terms of number of triggers and trades, but just in terms of the total pace, and looking at challenges, from this point on and everything else, this is about the pace that I expect, with maybe sometimes it being just slightly slower, maybe sometimes being just slightly faster in terms of the number of trades. But this is the pace that it was designed to run at. This was the pace it was designed to happen at, and this is the functionality of it that it was designed to be. Combing over 600 pieces of 600 trade data or trades over the last 3 years to put all this together. Thanks for hopping on. Have yourselves a fantastic afternoon, and we'll be back here tomorrow morning. Take care.